Well, in today's dollars and cents, making sense of the gains and losses on Wall Street. Big climbs, but also very big dips. Joining us now with his perspective is Davis Garrison III with Preservation Financial Group. And Davis, good morning.
Good morning, Amy. How are you?
We are good. Everybody's kind of reflecting, I think, today on 2020 as we get ready to say goodbye. And man, what a year it has been in the financial world.
It really has been, and I've got some good information for you viewers this morning. And the majority of it comes from Yahoo Finance, April 21st, 2020. It is dated, but it is also up to date. And the significance of the whole event was the S&P 500 index plunged from its February 19th peak into a bear market in a record 16 trading days. Another 7 sessions later, the S&P 500 was down more than 30% from the February closing high. We have nothing to point to with the exception of the pandemic. And if you want to take a long-term look at things, and this is going back to 1870, the market in 1870, $1 in the market in 1870 in US dollars invested in a hypothetical US stock market, such as the S&P 500 index, would have grown to $15,303 by the end of March 2020.
And so as we take a look at this, Davis, this is the way you said investors now are really going back years and years ago to some of the other crucial happenings on Wall Street and sort of learning from what happened and how they recovered in time.
Exactly. And if we look back to one of the 17 stock market crashes that Mr. Kaplan outlines, and the ensuing bear markets or periods after the stock market fell more than 20%, if we look back, and some of us can remember it, some of us can't, 1974 through 1983 was the longest crash and sustained dip in the market. And when we came out of it in 1983, we had double-digit inflation. I ask people all the time if they remember the 80s, the early 80s, when mortgage rates, prime mortgage rates, were 13.5%, 14.5%. This was during Ronald Reagan's tenure, and we haven't seen anything like it, and haven't seen anything like it yet.
And you say yet, as you guys are taking a look back, and I'm sure right now as things try to recover, what is the talk as we're moving forward and into 2021? They say that you can still, I read in this article, if you've got time and patience, you can still reap the rewards, but it is certainly going to be a bumpy ride.
It is going to be a bumpy ride, and we really don't know when the bumps are going to come, when the flat line is going to come. We just don't know. We are in the first pandemic to strike this country since 1917, 1918 with the Spanish flu. And so, predictions are just that, predictions. I can get on my stump and yell all that I want, but it's not going to make any difference. The emotions of the market, the emotions of the pandemic are going to rule.
Well, and as you said, even throughout 2020, just very hard to try to stabilize anything. So many factors contribute to just ups and downs every day.
Exactly. And my fear is that we are going to not come out of the pandemic as quickly as most people want. And the economy is being pushed by the pandemic, and there's nothing that we can do about that.
All right. Well, Davis, as always, we thank you for your perspective, and we look forward to working with you again in 2021 as you keep your eyes on the market and all that entails.
Thanks, Amy. See you next year.
All right. Happy New Year. If you have questions or comments, you can always find him by dialing that number or on his website, preservationfinancialgroup.net.